Stock investing for beginners. Google stock is going up. Why? What are the things that you should look out for when choosing a great stock? Welcome to World Traveling Millionaire Stock Investor and Option Trader. Where are you watching from? Comment down below. Google stock is up after earnings report. So over the past 5 days, it's up 7.8%. So year to date, it stayed down 15.21%. But when you look at the stock, you need to look at 5 years, right? 5 years, 143.83%. My number one criteria to choosing a stock is it has to be S&P 500. So 95.31% over the past 5 years, S&P 500. So what is S&P 500? S&P 500 is a collection of one of the best companies in the world, 500 of the best companies in the world. So if a company could be S&P 500, it could be potentially be a great company. So this is not the only one criteria. So my second criteria is, has it been in the business for at least 10 years? So maximum, so look at that. Yep, the company has been around for at least 10 years, since a long time, and public company for at least 5 years. That's my criteria number 3. Public company. Yep, look at that, August 20, 2004. But if you go to look at the founder date, you could see that it's October 2015. It's most likely because they changed the name. Alphabet. Alphabet is a parent company of Google. So they changed the name, so that could be the date that they changed the name. So that's why you need to look at to the picture. Hey, this company is founded in October 2015. So how could that be the stock market? You see, August 20, 2004. So of course, I already know that Google has been around for more than 10 years. So, but this is how you should look at it, right? So 2004, yeah. So they has been definitely around at least 10 years. And criteria number 3, at least 5 years as a public company. So why is it important? Because you want to know what types of investors and traders invest in this company. You want the stock to go up over the past 5 years. Look at that. Yep, it goes up. And if it's very volatile, then you know that this company may not be suitable for investing. And why do I care about being in the business for at least 10 years? Because 10 years is a good business cycle, right? Can it weather the storm? Can it weather recessions, financial crisis, whatever? So that's why I have these 5 criteria. So criteria number 4 is, do I like this business? Google is a high margin advertising business. And they also have cloud service. And they also entering AI. So I love this business because it's high margin and everybody uses Google to search for the answer. So it's like monopoly, right? So yeah. And criteria number 5, look at the financial statement. So if the income is going up, revenue is going up, so balance sheet is strong, then I'm just gonna choose the company. Yeah, Google is one of my favorite companies. Of course, this is not financial advice. You can do your own due diligence before choosing your stock. Google stock rises because after it beats on earnings and raises dividend and authorizes 70 billion in buybacks. So there are a number of ways that a company can increase its stock price. Of course, the most important thing is to increase revenue and to increase net cash inflow or net income. So there are a few other ways that may not be the main factors that push the stock price, but also important. If it raises the dividend, which is good, it's a good sign that this company is confident that it could have the cash coming in for the foreseeable future. And another thing is buyback, stock buyback, 70 billion. So why is it important? So whatever you own in your hand, let's say you own cash, but if the government keeps printing cash, then what you have in your hand becomes worth less because there are a lot more of cash in the market. The same way with stock, if there are so many stocks in the market, the stock is not as valuable, but if they keep buying back the shares to reduce the supply of the stocks, then the stock can become more valuable. So that's why I like it. So, and also look at the revenue. You see, revenue keeps going up. Look at that. Look at that. Of course, Google side here is the number one revenue. And then after the Google net worth, and then subs, platforms, and devices, and Google Cloud, and YouTube ads, and other bets and hedging. So Google side is the main revenue, and I would say the second will be platforms and devices. Then after that, Google Cloud. Google Cloud is big. Google Cloud is the second. Look at that, Google Cloud. So that's why investors also focus on cloud services because it's really high margin service. And YouTube ads, YouTube 8.9 billion. First, second, third, then fourth, fifth, sixth. So sixth revenue platform. So I always keep at the company, look at the company revenue. If it keep going up, then most likely the stock gonna go up. And also look at that. Google shares up as much as 4% on after earnings, they report earnings. And 90.23 billion versus 89.12 billion. Better than expected. And it should be 2.21. 2.21 versus 2.01 expected. So it's good, but there is an unrealized gain. So I would not say don't focus too much on that. 2.21 is easily beat expectation, but I would say it's a good EPS. And YouTube advertising slightly down compared to expectations, 8.97 billion. Google Cloud Services slightly down, 12.26 billion versus 12.27 billion. So not much, not a big deal. Traffic acquisition costs jump up, 13.75 billion versus 13.66 billion. So if you really look at that, the margins. Cloud's unit source is revenue increased 28% year over year, and its margin came in at 70.8%. So better than expected margin, 9.4% compared to. That's why Google stock is I would say it's an A minus. Earnings not, I wouldn't say it's A plus, it's A minus. So and very important, Google has a Waymo, right? Tesla, and I think Google Waymo is beating Tesla. 250,000 per week paid shares compared to 200,000 in February. The one before Waymo opened in Austin and expanded in San Francisco Bay Area. So have you taken Waymo before? Comment down below. So this could be the next revenue driver, but I would not say it's gonna be as good as advertising or Google Cloud. So if they can increase Google Cloud and advertising market share, that would be great. Maintain the market share. AI investments pay off too, so that's why anxious investor become calm and stock went up a little bit. So this is good news. AI, and lots of people is gonna be focusing on AI. So Google and all the other Magnificent Seven should focus on spending versus return. Google ad revenues grow slow but tops Wall Street forecast. That's good. And spending is up too. But as long as they keep having the cash in for their investment, I don't see any problem. Reaffirm its plans to spend 75 billion in 2025 to pay out AI capacity. So that's good news for Nvidia. Spending jumps 43% from last year. That's good. And if you want to travel around the world, why spending only 1 to 2 hours a day? Start investing in option trading, and you can subscribe to my channel and learn about stock investing, option trading, and advanced option trading, and other investment education. Share, subscribe. I will see you in the next video. Bye bye.